Welcome back to the Finance and Accounting Show. In today's Tax Tea episode, we'll talk about a real case from Florida where someone ran a tax fraud scheme for years and eventually got caught by the IRS. We're going to walk through what happened, how the IRS uncovered it, and what you can do to make sure you stay far away from these kind of mistakes. You'll also hear from our AI guest host, who's breaking down the details and sharing a few practical tips to help you stay on track with your finances. So stay tuned and enjoy the episode.
Okay, so ever hear about that financial advisor down in Florida? Thought he'd found this amazing tax loophole. Turns out it was, well, less loophole, more like a one-way ticket to trouble. We're talking fake royalty payments.
Yeah, seriously fake. And it's a huge cautionary tale, especially for, accountants, firm owners listening in.
Absolutely. So we're digging into the sentencing of a guy named Stephen T. Mellinger III.
Right. And it's quite the story. Not just a little mistake. This was like almost a decade this scheme ran, involved massive amounts, over $100 million in dodgy deductions.
Oof.
So our mission today, break down how this creative accounting went so wrong and pull out the key lessons for you. How to spot this stuff, protect your clients, and frankly, protect yourself.
Okay, so let's get into it. Mellinger. Yeah. He wasn't just in Florida, right? He had operations in Michigan, Mississippi, elsewhere too.
Yeah, spread out. And
Yeah.
It started back in, late 2013, lasted nearly 10 years.
10 years. And the core of it was these royalty payments. It sounds legit, maybe, like music rights or something.
You'd think, but nope. These weren't real royalties for any actual intellectual property or anything of value. It was basically a money go-round.
A money go-round. Explain that.
Okay, so the client sends money to Mellinger or his buddies. They skim off a fee.
Nice work if you can get it.
Right.
Illegally.
Right. They apparently made around $3 million in fees, him and a relative, but then most of the money just gets wired back.
Back to the client.
Exactly. To a different account the client still controlled. So the client never really lost control of the bulk of the cash.
But they deducted the whole amount as a business expense, like it was a real payment.
Precisely. Over $106 million in false deductions claimed over the years.
Wow. Okay, so they're just basically shifting their own money around and calling it an expense.
That's the gist of it. And the IRS, they estimated the tax loss at about $37 million.
$37 million. That's going to get flagged eventually.
You'd think so, and it did. Around January 2016, things started to unravel. Some of the clients involved got investigated. Funds started getting seized by the government.
Okay, so the heat is on.
Big time. And here's where it gets, even worse.
How could it get worse?
Mellinger and this relative, with the clients already under investigation, they allegedly stole over $2.1 million from those clients.
Get out from the clients whose money was already being seized.
Yep. Talk about kicking someone when they're down. He even apparently used some of that stolen cash to buy himself a house.
Unbelievable.
Yeah.
The audacity.
It's pretty wild. But, crime doesn't pay, or at least it catches up. He got 8 years in prison.
8 years. And restitution too, I bet.
Oh, yeah. Ordered to pay back the full $37 million tax loss.
Serves as a stark reminder. And it wasn't just one agency, was it? DOJ, IRS criminal investigation.
Right, a whole team effort. DOJ, Tax Division, Criminal Division, the U.S. Attorney's Office, IRS-CI, even the Department of Defense's Investigative Service got involved.
And that IRS-CI unit, they don't mess around. Their conviction rate is sky high.
North of 90%, yeah. You really don't want them looking into your affairs.
Okay, so let's pivot to the takeaways for the accountants listening. What are the big red flags here? What should you be watching for?
Well, the most glaring one is that circular flow of funds we talked about. Money goes out, takes a little detour, and comes right back to the client. Huge red flag.
Right. Alarm bells should be ringing.
Definitely. Also, be really skeptical of deductions that seem way out of whack or where the economic substance is questionable. Is there a real business reason for this expense?
Especially vague things like royalty payments, if there's no clear asset or license agreement backing it up.
Exactly. Ask for the documentation. Understand the why. Which brings us to client due diligence.
It's so critical, isn't it? You can't just take the client's word for it, especially on major deductions.
No, you've really got to understand their business. Probe a bit. Ask the clarifying questions. Why this structure? What's the basis for this expense? It might feel awkward, but it's necessary.
Protects the client, protects you. Because ignoring this stuff, or worse, helping set it up.
Massive risk, legal trouble, losing your license, destroying your reputation. It's just not worth it. Your professional skepticism is key.
It comes down to integrity, really.
Yeah.
and clear communication.
Absolutely. You need to be able to have those frank conversations with clients about compliance, about the dangers of schemes that sound, too good to be true.
Because, as Mr. Mellinger found out, they usually are. This whole case just screams, stick to the rules, be vigilant.
Couldn't agree more. Promoting or even just participating in these illegal shelters, the consequences are severe. It's a reminder to stay grounded in ethical practice.
So maybe a final thought for everyone listening. What kind of checks and balances do you have in your firm? How do you spot potentially fishy transactions or structures?
And maybe just as important, how do you make sure you're building that trust with clients so you can have those honest talks about tax rules and risks?
Good questions to ponder. Definitely worth thinking about proactively.
Thank you for tuning in to another episode of the Finance and Accounting Show. If you like what you heard, don't be selfish. Make sure you hit that subscribe button and then share this with a friend, because you know a business owner that could definitely use this insight. So be sure to hit that subscribe button, share it with a friend, and turn on the notification bell so you get all the updates when we release a new episode.